Well, for the stock of the day, I thought we'd take a look at Reliance Worldwide. It's presenting at the Macquarie Australia Conference today, updating the market on its strategy and third quarter performance. Net sales rising 14% on the previous year. Price increases hit 8.7% to offset cost inflation. This, though, is as it falls out of favor with some brokers. I mean, earlier this week, Citi cut its price target to $3.84. Jefferies revising its expectations to $4.90. Still as a buy, though. And today, we did have another broker come out, but it was Morgan Stanley, lifting its price target to 2% and upgrading it to overweight from equal weight. So I thought I should ask my guests about Reliance Worldwide. Ben, I'll start with you.
We used to own this,
Yep.
and sold. Was one we did well selling about 6 months ago, and I reckon it's starting to look interesting again now. To me, this is a business which, when we got into it, and we went through some ups and downs, and I underestimated quite how volatile the earnings can be. There's a lot of sort of external forces which can give them a good or a bad earnings season, particularly the weather, as bizarre as it sounds. When they get these big deep freeze events in the US, they get this massive knock-on of work. But the copper price is a big deal for them. They've had supply chain issues. There is an element of non-discretionary work for them, which is what I liked. But to me, it's kind of like shifted back the other way, where everything's sort of gone against them again, and earnings, I think, are probably a bit depressed. Copper price is low. They're pushing through price increases. They've said demand has held up. So it's almost, this one, it's a bit of a trading stock in a way, and I think it could be an interesting one to look at now. So
On the day, though, I mean, it's up by 6% today,
Okay.
sitting at $4. Sitting at $4.29. Yeah, that sounds
Well,
right.
I think-
So would you buy it today, or do you think that because of the lumpiness and some of those external factors that you could get it cheaper on some sort of a pullback?
I probably would buy it today. I mean, obviously it would have been better yesterday, but it feels like there's going to be some margin improvements in the next sort of year. And the US last year didn't have one of the deep freezes. The year before they did. So it's kind of like that.
It'll happen.
It'll happen again.
Yeah.
And it leads to a lot of cracked pipes that need to get fixed. There's not a discretionary nature to that. It's just got to get done. So the copper price is a big deal as well. So it's well managed. I think the CEO's done a really good job with this business.
Yeah. Okay. What do you think?
Look, we had a look at this when it IPO'd, and at that stage the founding family was still involved, and they've since sold out everything and left the business in its entirety. I look at the margins on this business, and I just think they're earning too much money for what the business is. So, they make these shark bite connectors where instead of welding pipes together, you have a little bit of kit and you screw the pipes in together for plumbers behind the wall, and it makes eminent sense. It's a good invention. But it's not rocket science, these things are available everywhere. Reese has one, Ferguson has some. Most large plumbing supply biggest businesses have their own version of them. So then you ask the question, well, what is this business if it's easy to replicate and it's just available at the local hardware store? And I think it's a brand business, what the way this business makes money is through the SharkBite brand. And I'm just not convinced that it's a strong enough proposition to generate these kind of margins. The returns are outstanding. On paper, it looks like a very high quality business. I'm just not sure it's a resilient one. Ben's already mentioned the sort of external factors that hit it, and we've seen it's extremely cyclical. I just don't think it's resilient. And for me, Reese is starting to look far more interesting than this. And I think James Hardie is a far better quality business than this is. I wouldn't be, I think in terms of value it looks okay, but that's assuming the margins hold, and I think they're going to face margin pressure in the future from increasing competition, and I'd probably avoid it at this stage, Nadine.
There you go, difference of opinion, that's what makes the market, but you sold out at just about the right time, it looks like, by that chart.
Yeah, that was good. And Reese we've held on to, and I think I would agree, Reese is a much higher quality business. If I was picking between the two, I would be buying that one first.